Hey traders, it's Heather, and we have just closed the book on February 2026. What a month! You can see here that we are still just stuck in this range. That doesn't mean that there aren't ways to trade this, but we just kind of need to be mindful that right now we're just in this range between about 6,700 and 7,000, 6,850, 6,950 if we want to get a little bit more precise. And look, nothing wrong with that. Directional trades are an absolute blast. I love them too, but we can still trade directionally as long as we are in this range. And that's definitely what I have been doing. So February tends to be a little bit weaker, and we certainly saw a lot of that. This is the entire month of February right here, and you can see that we actually spent the majority of the month, or at least a good portion of it, below the daily 21, which we often refer to as the mean. Okay, let's look ahead though. What can we look for in March? So, a couple of things. First of all, I'm really not anticipating that we break out of this range just yet, but I do think that we're going to start maybe seeing a little bit more time above the daily 21 rather than below. Why do I think that? So, a couple of reasons. Number one, the first half of March tends to be a little bit easier than February. I don't want to call it strong, but we could say maybe not as weak, okay? So that's number one. Number two, and I'm just going to switch over my grid here really quick. Let's see. I want to take a look at the put call ratio with you because that is giving us some signs as well. So let me make this bigger so that we can see it really well. Okay, so this is the put call ratio. It's really just measuring the ratio of open puts to open calls. What I'm looking at though, I'm not actually looking at the candles. This is a daily chart. I'm not actually looking at the candles, which is why I have them grayed out. I really want to pay attention to this moving average right here. This is the 8 EMA, okay? When it gets up to about 0.85, 0.9, that's when we tend to see more buyers stepping in. So when it's really low, like right back here, that tends to be when the market kind of tops out. There's not really many buyers left in the market, so we can kind of see some selling at that point. And then once that moving average gets right around here up into this range, that's when we see more buyers stepping in. So the fact that this moving average is starting to drift lower, that's a good sign for bulls. All right, so those two things combined are really telling me that, okay, maybe we can start looking for more upside. I'm not looking to make any new highs in March. I still think that we're going to see a range-bound market, but we might be spending more time above 6,900, which is right where the daily 21 is right now. Okay, so I want to spend some time looking at the monthly quant pivots with you. Now, if you've ever seen any one of my Friday videos, you know that I go over the quant pivots quite a lot, and I typically go over the weekly quant pivots on Fridays, but because today is the end of the month, I actually want to go over the monthly quant pivots. That's these lines right here. So the white is just where we opened up that period. This red line up here is the H1. This green line down here is the L1. L is for low, H is for high. And what we see is that price tends to stay right in between those two levels. In fact, very rarely actually closes beyond those levels. They pretty much just represent extreme levels, and price likes to play in this zone. So it might not be sideways the way that it was this month, but it might go up like this and then come down like this. So it could still, close higher, close lower during that period, but in general likes to stay in this zone. So how often? Let's take a look. I'm actually going to switch this to a weekly time frame so that we can get even better stats, so that you can see that right here, this is February, right here. These are the quant pivots. H1, H2, L1, and L2, okay? And then price really likes to stay in between the H1 and the L1. How often does it do that? I'm so glad you asked. So price, and we're looking at 46 periods, so that's a good sample size right there, okay? Price only closes above the H1 on a monthly time frame 21.7% of the time, and it closes below the L1, so that would be below there, 8.7% of the time. So we're talking about 70% of the time. If we look at every single one of these monthly quant pivots, 70% of the time price is going to close the period. Doesn't mean it'll stay, but it'll close that period in this zone right here, in between H1 and L1, okay? And it's all based off of the opening price. So we'll get some new levels on Monday, March 2nd. We'll get some new monthly levels. How can we make a trade off of that? All right, so what I like to do is I like to open up an iron condor on the first trading day of the month, and I like to place my short strikes just outside, for a little bit of extra protection, just outside the H1 and the L1, okay? And then what I do is I place the wings out about 25 points. If you wanted to do 30, I think that's fine. I wouldn't go any narrower than a 20 wide, but 25, 30, great points. You're gonna set your expiration for the last day of the month. Okay, now, last month when I did it, 25 wide iron condor, I sold it for $9.70 and I took it off when it hit 50%. Now we've got really good odds here, right? If something works 70% of the time, by all means, you could just let it cash settle. If we're talking about SPX, it cash settles, so you won't be assigned any shares. And you can just roll the dice if you want to and assume that, you know, if you do 25 wide and you receive, let's just say, a $10 credit, you are risking $1,500, but it works 70% of the time. And so 70% of the time, in theory, you'll just be able to collect and keep that entire credit. Me, I like to close it out and move on to the next trade. Typically takes about 2 weeks for me to cash that in, but nice, sweet little easy walk away trade. All right, so if you are in the Mastering the Trade room, or if you are in the small lot trading room, I give you these levels every single first day of the week for the weekly quant pivots, and then also first day of the month for the monthly quant pivots. So even if you don't have this indicator, it's okay. You can still get the levels just for SPX if you're a member in any one of those rooms, and try the trade out. See if you like it. For me, I love it because it's just kind of easy. I don't have to stay glued to the computer. Not something that I really have to pay attention to. So if you want to join me in that trade, by all means, go right ahead. Love to have you join me. Okay, we're going to switch over to, I want to look at the weekly quant pivots, because guess what? You can do the exact same thing on a Monday morning with the weekly quant pivots. So you can see now those lines have gotten smaller because now they are looking at that weekly period. Once again, SPX closed inside of that range. So if you opened up a weekly iron condor on Monday with Friday's expiration, you could absolutely let it cash settle and would have been able to keep the entire profit. Okay, again, I typically close it out for to lock in those profits, but you can do it however you want. Let's look at the stats for the weekly quant pivots. Weekly only closes above the H1 5.7% of the time, and it only closes below the L1 11.4% of the time. So those are even better odds. We've got about an 85% chance that price closes right inside this sandbox right here. So that is a really, really easy iron condor that you can do at the beginning of every week, and the beginning of every month, okay? Let's move on to some other trade ideas though. So here's the thing, if we take a look at mags, I'm just not interested right now. Pretty much everything inside the mags looks like garbage, just in a downtrend. And then, you know, I think it's really going to take a while for this to recover. When it does, then I think we can start seeing new all-time highs in the indices. But as long as the mags are heavy like this, I'm going to look for other areas to trade. Okay, so what do I like? And this is a tech, it's not mags, but this is in the tech sector. I really like MU right now. So it has been in an ideal squeeze, kind of popped out of it today. It's still in a squeeze, just not an ideal squeeze. I think if it moves a little bit higher on Monday, I think we could probably see it enter back into an ideal squeeze. So not a huge deal that it fell out of it today. It's still holding the daily 21, still in a very bullish uptrend. So I really, really like MU a lot. My first target is going to be this recent high up at 455. If it keeps going, and I assume that it will be, but of course time is always a factor. My second target will be this fib extension right up here at 490. And then of course, once you get to 490, you got to look at 500, right? Okay, so those are my targets on MU. Next up, we have ASML. Had a great run, just riding 3 ATR, and then it has fallen back to the daily 21, resumed its uptrend, did have a nice ideal squeeze that fired, and then yesterday we got a sell signal on the Monster Momo on the daily time frame. But so that sell signal did follow through with, you know, today it pulled back again. Where did it land though? Right here at the daily 21. Perfect place for ASML to pause, rest, catch its breath before it can resume its trend higher. Okay, still in a bullish trend, so I definitely want to still play it to the long side. I always want to play a bullish stock in a bullish way. But if it can consolidate here for a couple more days, I think that maybe we can really get some good squeezes going. So what are my targets for ASML? I think a retest of this high up here at 1550 makes perfect sense. And then I have another fib extension right up here at 1600. So those are the two things that I would be targeting. So that is all of the trade ideas that I have for you, except one more. I'm going to go back to SPX, right back where we started, because let's take a look at the Trader's Almanac. Okay, so this is something that I reference quite a bit. Just as a reminder, not a crystal ball, nothing is, but it's pretty accurate a lot of the time. In fact, this week it was spot on. So definitely like to use it as a guide. It is not my only thing that I use to consider before getting into a trade, but I definitely like to use it as a guide. So what is it saying for next week? It is saying that on Monday, which is the first trading day of the month, that is statistically a bullish day. Tuesday is statistically a bearish day. So if that plays out, if we do get a move higher on Monday, then I will use that bounce to get short for a trade that expires on Tuesday. Really easy way to do it is you could just buy a put debit spread where you place your short strike at 6,900. Nice psychological level, and it's also where that daily 21 is, okay? If you wanted to do a cheaper trade, but that had a really big range of profitability, you could open up a 5 wide or even a 3 wide butterfly on XSP. XSP is exactly the same as SPX, except it's 1/10 the size. So if you were to open up a 5 wide butterfly, that's actually the equivalent to a 50 wide in SPX. Okay, so your profit is going to be 1/10 the size, but your cost is going to be 1/10 the size as well. So maybe you pick something up for, around $1 with a $5 or a, $4 max profit. That's always something good. You could target something like 68.50. Really kind of depends on where we are on Monday, so I don't want to give you anything too specific, but that is my plan on Monday. If we get this bounce on Monday, like the Trader's Almanac is saying that we could, I will use that bounce to go short into Tuesday. All right, so now that really is all of the trade examples or trade ideas that I have for you. On that note, I love to talk about doing a review at the end of the week, also at the end of the month, which is where we are. So I want you to go back over your trades that you had throughout February. Spend some time this weekend. Doesn't have to be a lot of time, but spend some time this weekend and review all of your trades for February. See where you went wrong, see what you did really well, and then make a plan to improve off of that for the month of March. All right, that's what I have for you, traders. Thank you so much for joining me. If you have any questions, make sure to leave it in the comments below, and I will see you in the trading rooms on Monday. Thanks so much.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me.